Start over. I guess I'm going to have to start over. Let's go back to Bitcoin. I'm going to have to edit out the first part. All right, never mind. That's fine. So Bitcoin is getting ready to do something, and I've been looking at this this triangle on Bitcoin, and in the last stream, yesterday's stream, I was saying let's just be patient, let's just wait, let's just see what happens. And what you'll notice is that as you give it time, if you give the price time to figure itself out, it will start to create patterns and it will start to form trends. And once the price starts to do that, you can begin to either trade that or use that to form a bias to trade. And so obviously yesterday the price came up. It came into this trend line, which I didn't mark out, but it was there because you had 2 points already, and it sold into that. And so obviously some people took shorts, I guess, but now we have this upper trend line. And we have this lower trend line as well. So it hasn't actually managed to reach that. But what you can see now in Bitcoin is some sort of equal triangle. Yeah. See, this goes a little bit more and the line is back there, but that's by the by. That doesn't matter. And this is quite good for us actually, because now we have a definite trade at hand. If we can break this trend line and then a little back test, we could long, you know, that's the long, because we've broken this upper trend line. If we can go up, whether we squeeze this level or whether we just break the trend line, back test and then squeeze, once this trend line is broken, based on the shape of this triangle, you would expect the price to go up to match like a 1-to-1. You would expect that, and you would expect new highs. That would make sense, and then we have to see what the price does at the new high. I think it's a lot more likely right now for the price to go up and break that upper trend line than the lower trend line. Quite simply because what I've noticed is every time the price is dumped, it gets quickly brought back up. And so I think this is to do with the sentiment of the market, with the big news, the ETFs are ready, the ETFs are launching, BlackRock is launching an ETF, and BlackRock has never had an ETF application rejected by the SEC. So based on that record, you would expect everything to go smoothly, and it would be very unusual for suddenly for the ETF to be rejected. Now, whether it gets delayed or rejected or accepted, I think those are the two possibilities. And everything that I've been reading suggests that there's no delay. Like it's the final things have been done, which suggests that the ETF is ready to launch. And then the next question is, are we going to get a sell the news event? And I think it's always possible, but I think it's quite unlikely, simply because a BTC ETF opens up new liquidity to the market. And the new liquidity is coming from basically all the companies in the world who can now buy BTC and put it on their financial books in a very legally formulated way. So I think a lot of companies may be looking to take an initial position in Bitcoin once the ETF launches, and that would require a market buy, some sort of market buy. So I think you would expect some kind of increase in volume with an ETF launch. And I think a lot of people will be looking to sell a little bit higher rather than just sell a launch where we're still trapped in a range, you know, like we're still in this range. We haven't gone anywhere. We're still ranging. And that's, if you look at this channel that I've drawn, look, we're still range bound. We're still range locked. It's very unlikely that people are going to suddenly sell big when we're in the middle of the range. It'll be a lot more likely that you get big sells as we take higher highs, or if we were to lose significant lower levels. That's kind of the two scenarios where you're expecting bigger sell-offs. So it's I think it's very unlikely. And obviously you can see all these like red expanding candles, but quite simply, these are over leveraged traders getting burnt, every single one of them. So what happens is, like, these recent rises have been highly leveraged, and then what highly leveraged traders do is they move up their stop losses, and then as the price comes underneath, you get a big liquidation events. And I think the same can be said here, and then you get big liquidation events, and these big candles now that are going down are big liquidation. And then we get into a point now where it's becoming less likely for liquidation events to happen, because they happen. Look, they've happened. And naturally now, if anyone is playing this high risks, high roulette, high risk poker, whatever, where it's just over leveraged longs, I imagine that most people's liquidity is going to be here. Their liquidation level is going to be here. Yeah, that would make sense. So you have to contemplate these things. And I think at the same time, the smart money, usually when the smart money wants to fill larger positions, they're looking for large market sells. So larger market sells are going to be underneath these two wicks here, and then probably under these wicks here, because those are the liquidation levels. So if you've got a big corporation looking to fill a large position, they naturally want to place their limit orders where there's a large volume of market selling, and that will be at underneath these lows. So because what happens is, if the price comes down, highly leveraged traders get liquidated, which is a high volume market sells, and so naturally large limit orders can fill, because all of a sudden you've got the whole market selling, filling your limit orders. So I think if a big player wants to fill large positions, rather than try to fill it in the middle of a range, what they'd be more inclined to do is wait for the price to come back and liquidate traders, and then they can fill positions, and they also get a better position because they're getting filled at the lows rather than somewhere in the middle. That's usually what happens. So I think a lot of people are anticipating the price to break out upwards, and I think I've seen a lot of posts on Twitter which some significant traders have taken leverage long positions, or they've closed their shorts, they're out of all their shorts, and there's a lot of anticipation for what's about to happen. So how would you trade this? Well, I have a trade plan which I did earlier, and I'm going to put back my lines, and I'm going to show you what I'm looking for now. So I'm actually looking for us to come and for a long. I'm looking for us to take the liquidity underneath these lows, and then I'm looking for some kind of swing failure to come and bounce off this lower trend line. And I'm not going to just blindly take it. I'm going to wait for the price to come back above this swing failure level, and then I'll take a long. And then my initial target is going to be this upper trend line, or somewhere in between, and that's kind of what I'm looking for a long, right? Now if you want to scale in a long, then clearly your invalidation is going to have to be under one of these lower pivot points here, and you have two here, and then you have the main one down here. I'm not expecting this lower one to be reached, but anything can happen, so you have to be prepared for whatever reason. You always have to be prepared for this for a V-shape taking all of this liquidity. You have to be prepared for that. It could happen. So I think if you really want to play this kind of high stakes poker with highly leveraged trading, realistically your liquidation level should be much lower. But anyway, I mean, that's not my business. That's your business. I think I don't think I'm looking for a short right now, and I wouldn't short the next touch of this trend line, because we've already hit it potentially 4 times, yeah, from the high, but maybe 3 if you don't include the top. I think you'd say that that's 1, that's 2, that's your 3rd time. Usually with these trend lines you don't attack it the 4th time, so I wouldn't necessarily expect people to sell into the 4th touch of this trend line. I wouldn't expect that, and it may happen, but if that does happen, then they'll probably get liquidated very quickly, because there aren't, like, the biggest shorts aren't going to enter in on the 4th touch of this trend line. It's usually the 3rd touch. So actually I'm expecting more longs and much more volume at this level than volume coming in at this level. And actually, even though it would be wise to take profit just in case, the reality is I am actually thinking that maybe it is possible that we break this trend line and continue. And then if we were to do that, then I would, you would expect this, like a 1-to-1 on this triangle breakout, and then maybe you would expect something like that. So that would, you are then targeting the previous high, and if we can squeeze up there, that's when maybe you would be thinking about either a short or just to take a significant portion of your profit. And I think the thing is that what you have to consider is that if, go back and get rid of these, if the price gets back into this range, this upper range here, so basically this upper range value area is this red line that I have here, this upper range value area low. If the price gets back up to there, that is considered a sign of strength, and you could long the sign of strength, and your invalidation would obviously be to lose the upper range again. You'd have a very easy invalidation. So if we do manage to get acceptance into that upper range, then the reality is that I would be expecting an increase in volume to go up, and the target then would be to liquidate the shorts who have their stop losses above these highs. That would be the target, and then we'd have to see how far it squeezes up, because if you get a liquidation event there, it's very likely that the price will squeeze up, and then now we're in a new range. Now we're in a higher range. That's kind of how the price moves and behaves, and then you would have to be looking to take profits higher up. I think if we get a breakout, then that is the kind of expectation of the price to break out, to come into this upper range, the volume would come in to squeeze the previous highs, and then we would go up and form a new range above this current range that we're at. And actually, if that was to happen, then you'll get a large amount of volume coming into the market because of the FOMO that would enter the market. I think a lot of people, see, the thing is, like, even though we are range bound right now, I think a lot of people are still out of the market, because on the higher time frame, I think a lot of people have missed this move all the way from when we were here. I think a lot of people were hoping to come for lower. They were hoping for the price to come here and coming at 20,000. So I think there's a large amount of liquidity that's out of the market right now. And we've had this unbelievable rally, yeah, and we haven't really had any major pullbacks. Like, we haven't had a drawdown on the price. So I think there's a lot of people who have a large amount of capital and they're just out of the market and they're trying to get in. And how do they get in? Well, they can't, because the price hasn't pulled back. This is just what's happening. This is what's happening before our eyes. There's a large amount of people who are trying to get in, they can't get in. The price just keeps on going over. Now people are looking at the price and they're going, I wish I came in at 34. I wish I came in at 38. I wish I came in at 40. Like, that's the thing. The price just has been keeping on going up. A lot of people were selling in this lower range, 25, hoping for the price to go down so that they can capture a better position at 20 or even lower at 15. But this rally has proved to be very strong and a lot of volume has come in. And if the price continues and people are still out of position, then I think a lot of people are going to start to FOMO in, which could push the price higher and higher, and that's when you're going to get higher prices. And if we are able to take out this high here, then it's very likely that we could squeeze up further. There might be a large amount of liquidity above this high here. There might be people who are short and they still haven't closed their shorts because they just weren't expecting the price to come up so high on this single run that we've had on this move. And with the increased volume from the BTC ETF launches, it is very possible that we do push up, you know. And I think a lot of people are well positioned, much lower, and they're highly leveraged, and they're not under threat. None of these longs who positioned in all the way up to here are in danger of being liquidated right now. You know, they don't, and a lot of longs, you don't need to move your liquidations up to be too aggressive. It could be just, that could be the nearest liquidation level for a large amount of these longs, and we're very far away from reaching that point, you know. Very far. We have to lose some significant levels to get down to that point. So what these bigger leveraged longs do is, with every dip they add to their long position, and so they keep on pushing up the size of their position, and that's what we're seeing now. We're seeing the price is being gobbled up by these highly leveraged longs. That's what these are. These are liquidation events. So this is all of the late longs getting liquidated, but what's happening is that the price is being gobbled up by these lower longs, these highly leveraged lower longs, and all they do is they kind of bring up their liquidation levels slightly. And so instead of maybe being their liquidation level being at 14,000, maybe now it's at 15,000 or 16,000. But instead they have a larger position, and they just keep on building their position. At every level that they go, they keep on increasing the size of their position. So I'm just waiting to see what happens with Bitcoin now. I think we're in this triangle. I think it's more likely that we break up than down. If we do go down, I'm looking to take a long at these once we take out these lows. Otherwise, as soon as we do break out, I think a lot of people are going to long that, just break out long. That would make sense. And then if that was to happen, if you were to break out long, then your invalidation would probably be this pivot low, wherever the pivot low is, and your target would be the previous high up there. You'd have a very easy trade for this breakout long. And I think once we get into this range here, then there's going to be a large increase in volume, because that would be classed as a sign of strength. That's the kind of trade that I'm looking for now. An SFP of these levels, or a breakout long of this upper trend line to go into the upper range. And then once you're in the upper range, you could actually add to your position, because then you are expecting to take out these highs, and hopefully if you take out these highs, you'll squeeze up. And if we do squeeze up, then we'll be in the upper part of this channel that I've drawn, and you'll have a position underneath the midpoint of this channel. You'll be very well positioned with that long position if we do break up and we start moving up to the next level. So we're at a very important point now. I think the whole market sentiment is bullish. I can't see any negative bearish sentiment, and I don't think people are trying to aggressively short. So you'd only really be worried if you started getting big shorts, and I don't see anyone shorting at these levels. I don't see any big shorts coming in at these levels. I don't even see any big take profits coming in at these levels. Yeah, I just don't see it. I think the next big short would be a failure of taking, like a squeeze and a rejection of these highs. And then if we come back into this range, and we can't, if we take the liquidity of these highs here, and we go up, we squeeze up, and then the price comes right back down. And I'm not talking about a failed auction now, I'm talking about an SFP, a swing failure. And then we come back down, then I think the next push up, you could start getting some shorts with the validation above that high that's been set. That wouldn't necessarily look bullish, because you're not expecting that kind of behavior. You're expecting a squeeze up, and then potentially with a bit of weakness in the way the price moves on a back test, you could then probably look to short this to come all the way back down. So you're basically failing to enter the top of the upper range, and you're just basically taking liquidity to come back down in this range. But I wouldn't just blindly take that trade. I'm waiting for the price to clearly reject. I want to see the price to clearly reject from this high. I want to see the price to come all the way down. Then I want to see a retrace into some level of confluence, whether it's the golden pocket aligned with the value area high of this range. And even then, I won't go heavy with the short. I'll scale into a short position, making sure my validation is up here, just in case this happens, you know, like it's always possible. So you'd have to ladder in your short, because if you're right and there is a rejection of these higher levels, then it doesn't really matter if you short right at the top, or if you short lower, or if you scale in your shorts, because then the thesis is that now we're heading down your target is now the bottom of this channel. Yeah, you're still in the range, or you're still going back down to fill the lower levels, to capture lower levels of liquidity. Yeah. So it wouldn't necessarily matter if we do get rejected from that level. You can play it safe. You don't have to be aggressive with your shorts, and actually you could wait for other shorts to show themselves, and then on the back of increasing volume on the way down, you could start laddering in shorts. So you can just wait for other bigger players to take shorts, and they will, because the bigger players will want to cover their longs, and they have a larger amount of money at stake, and they will be a little bit more aggressive with the way they short, because for them these smaller moves mean significant loss in portfolio value in comparison to the small, like me and you, like, you know, we're there to, with that, for them it's multiple millions and more for every percent or 0.5%. So they'll want to cover their positions. I think Bitcoin, it's pretty clear what's happening, and I don't think we need to go over it anymore. Yeah. So someone on Twitter wanted to ask me to analyze this altcoin. Let me pull it up and try and have a look. It was this guy B. He wanted me to look at QANX. I'm gonna send him the stream now, and then I'm gonna tell him to watch it, because I'm doing this for him. QANX, yeah, QANX. Let me have a look. Doing it now. So I'm going to have a look at QANX now. I've literally never heard of this token. So naturally, the first thing I do is what I'll do is I'll go and have a look at CoinGecko and see what it's all about. How do you even spell it? Did I do it right? What did I do? QANX. How do you pronounce these? QANX. Let me have a look on Twitter as well and see what people are saying about this. Are you buying the dip? QANX. QANX stands out as a crypto gem poised for a bright future. It encompasses quantum resistant security, adaptable smart contract coding, and a strategic vision for widespread adoption within the crypto space. Quan platform, QANX. Okay, so it is the Quan platform. QANX token. Look at this. It is the Quan platform, QANX. Okay, so this is it. Launched in 21. It rose from to a log chart. I don't want these lines on candles. Actually, I want lines. All-time high 20 cents. All-time low. Oh God, I don't even know what that is. That's. Ooh, it had a massive pullback. Huh? Look. It said it lost a lot of value in that pullback. It's got quite a good market cap ranking at the moment. we're looking at a market cap of 41 million, so it's quite low still. What are the markets? We're on Gate, Bitmart, and obviously on the DEXs, the 2 DEXs. So if it's on Pancake, I guess it's also a BNB coin as well. Does it say? It says Etherscan. So it's an Ethereum coin. It says Ethereum. Oh yeah, look, it's on both. So this is, it looks like it's a chain agnostic. So it's on 2 ecosystems at the moment. This is the website. Oh, it's a layer 1. Wait. Game-changing layer 1. Code in any language, resistant quantum attacks. Official blockchain partner of the group Renault brand, Alpine Esports. What does Renault want with this? I don't know. Introduction. Do we want to watch this? How long is it? 43 seconds. Build smart contracts, build. Enjoy. Mobile phone, under the fixed transition fees, cloud integration, be prepared. Doesn't really tell me anything. It's quite technical, huh? What's this staking? Alright, let's have a token. What's the token? QANX is a utility token of the Quan platform, just like Ether. So this is a gas, it's a gas. They have a burn, before burn, after burn. So all actors of the Quan platform need Quant's token to participate. So to use their platform, you need their token. So this is going to be useful for those developers who are using their tech setup to integrate into their own apps. And in order to do that, they're going to use their token as gas fees, which I guess are going to be burnt. Yeah, so you need to buy it for contract development. You need to buy it for executing methods of deployed contract, transaction fee when transferring. Validators need to buy validation tickets to participate in the process. Nodes need to buy the license in their token. All right, so this is quite, I mean, it's quite interesting. So I don't know how, like, I'm not technical, so I don't really know how much future use there's going to be. What's this staking? All staking pools are closed. Okay. Roadmap. They haven't got a roadmap for 2024 yet. Right. Yeah, I mean, it's probably going to be good, huh? I guess. Let's have a look at the charts. I think the first thing I'm going to do is find the one on, it's either Gate or Bitmart, I guess. Actually, I'll have a look at all of them and then I'll see which ones. No, these are all Ether, Wrapped BNB, rubbish, Wrapped BNB, B. Right, so it must be those two. Right, let's have a look. We'll go for the one with the most data first. Let's go to the weekly time. So on Bitmart, it goes back to the 23rd of July. This one goes back to the 22nd of November. So there's missing information. Did it launch? June the 21st. Can't we get more? Can't we get more? Why is there no more? That's annoying. It's all wrapped teeth. Wrapped BNB. That sucks, huh? I hate that. See, we're missing a large amount of data at the beginning, because on Gate it launched on the 22nd of November, and 22nd of November is the highs. See that? And it just sold off. So basically it launched at the peak of the bull market, the end of the bull market, and it literally sold off. The launch price, according to this, it's hard to tell, but it says 0.04646. Get rid of this BTC. Let's have a look at these candles instead. 468. This is, look, the 31st of May. That's when it launched and it went down. 468 7985. 468 7985. 468. No, I did that wrong. 0468, 0.0468. Yeah. Okay. Alright, so it launched on Gate at a lower price, and it just went up. So they sold it to Gate at a much lower price. But the actual launch price was this orange line that I've indicated here. See, when it launched on Gate, even though on this chart the price just goes up, actually on Gate it was launched at much lower. This price, that's the Gate launch price. I'm assuming that this is correct. Okay, we have a really important level, which is this orange line, which is the actual launch price of the token. But we also have a Gate launch price as well, and that's the bottom of this candle here, and that is 0.01751. So what I'm just getting from this right now is that the Gate launch was the purpose of that Gate launch was to raise money, raise capital to fund their runway for the development of this project. That's what a lot of these projects have used, these kind of like the lower tier exchanges as vehicles for raising capital from the crypto market, and unfortunately the timing. Oh, B has just messaged me. Hi, doing this token now. So yeah, the timing was unfortunate because they caught it at the peak of the end of the last bull run. That's what I'm getting from this chart now. You have this orange line, which is the actual launch price, and then this other one, which is the gate launch price, the gate token launch price. I think these two lines are very important for this token, so just bear that in mind. And I've got that information from CoinGecko. Just having a look at, oh god, what do they do? Refresh that. Linear and the max. Yes, you have the launch price there. The price went down. It launched on Gate and Bitmart, whatever. I think the Bitmart one came afterwards actually, and then it was sold into, and now we're just seeing where we are, and we have an all-time low. Let me just mark this all-time low as well, because I think that's quite important, and I don't know if it's gonna show, but let me try and, I'm assuming that this is it, but let's see. According to CoinGecko, this is the all-time low. Yeah. Don't know why. Let's see, is that different now? Let me try it on this one. Coordinates. Oh my god. No, this is totally wrong. Bitmart launched later, look, July 23rd. I think I'd just ignore the Bitmart chart because it's just not enough data, and I think you want more data. So I think I would just stick with the gate chart. Oh, you're following it for 2 years already. Hopefully you've made a ton of money already as well. This white line here is the all-time low according to CoinGecko. But obviously on Gate it's showing that it was sold, and I don't know, it's a bit weird. This chart's a bit weird, so I can't really tell much. I do know that this red candle was a really high volume candle. Someone just dumped a large position, and now the price is right back above where they dumped. Really, I don't know who did that, but that was really stupid. Selling at the lows like that. Oh look, October the 22nd. So this was at the height of FTX basically, or whatever, and that's why they dumped. They just panic sold. They just closed. I think what happened here is they closed all of their altcoins, and this is just one of their stack, and they were just exiting the market, and they're just waiting. And actually, in hindsight, that was the wrong decision, because look at what's happened. So B is saying that the all-time low was due to a hack. Okay, that's good information. Because of a third-party tool affecting 7 to 8 projects. Oh, trading was halted, and the team compensated everyone 1-to-1. Okay, wow, that's really good. So that's good news. So just so that everyone is clear, this has just been clarified. This was a hack, and everyone who lost money in this hack was compensated 1-to-1, and the team did that. So I am guessing that's why the price came back up. All right. So in that case, I think it's fair to say that we can pretty much ignore this candle and this candle. We can probably ignore these. and this all-time low. But let's just see how it plays, because we can try both and then see which ones kind of make sense. Give me a second. I just got a phone call. Right, sorry, I have to take calls because I'm always on call. So, okay, B is saying the real all-time low was around 0.008. So let's mark that out. I'll add it again. I'll add it somewhere here. So basically this candle, this wick here, that's what you're saying, this wick. Let's just call that the all-time low for now. We'll just call this, I just want to see if anything corresponds to this fake all-time low. Just in terms of the fibs and stuff, sometimes you never know. Sometimes these levels do still play a role. Alright, so we have all of that. We have very low liquidity, unfortunately. Let me see what the volume is now. Okay, so the volume is actually slowly increasing. It's gone now from an average of 4, 5, and it's now roughly about 13, 17 million. Let me see how much that is in terms of value. See how much that is in terms of value. 14 million times 0.02. It's about $280,000. It's okay. That's okay. Let me just see what it says on Trading View as well. It says lesser. Oh, that's TRVL. Sorry about that. Here it is. Okay, yeah. So it's more. Obviously, it's more because this is all the exchanges, not just the one exchange which I'm using. So I think the volume is quite good for a coin like this, for a smaller coin, and it makes sense because the market cap's at about 40 million, so it does make sense. All right, let's just let me just start. trying to ignore this candle, these two candles. It's hard, huh? It's not easy, because you have this gigantic ugly candle with a lot of volume. But basically it's putting the point of control much lower, and then it's also saying that the volume profile is difficult because of this candle. I think what I would probably do is what I initially did, was just ignore it and just have this first half volume profile, which would put your point of control down here, but we're still within the larger range, and you have a value area high which is sitting slightly above the launch price at the top of this candle. So this is a bit of a range of resistance above us, and then you've got this latter price action which has much more volume. So obviously the second part, this part here, is going to be much more significant than this first part, just simply because there's more volume here. But you have to bear in mind that, and this is what I don't have on these charts, is that there was a shitload of volume here in November 21, and these are at the highs. See that? And it's significantly more than where we are now. And I don't know how I can get, I don't know if I can, how I could do that, how I can get all of this volume, because I think that's going to play a role as you go back up. And the reason why that will play a role is simply because you're going to have trapped traders. You're going to have a certain amount of people who bought at the highs here and they didn't close their positions, and so they're underwater. And what happens is when the price comes back up to those positions, they're gonna exit at break even. They'll just sell at break even. They'll just walk away. And so that's why these volume levels matter, because it allows people who are long to see where traders in the past have accumulated volume at the previous levels, so that you know that those traders are going to be exiting at those levels because their trade went wrong. And so a lot of people will wait a certain period of time, 2-3 years, whatever, just to get out break even. Yeah. And so therefore, if you're accumulating at the lows, those levels at the higher ranges with higher volume are going to be very important. I can't see where that volume is now. It should be on gate, but I can't see any volume here on gate, so I guess it's not on gate. It should be here, but it's not. So I don't know where the volume came in. Let me have a look. Just add all of these and see. Nope. No. There's not enough data in any of these. Unless you can tell me where I can find it. I don't know. No. This is back to the original. Alright, so we just have to forget about that for now. Let's mark out the all-time high. It's not too much further up. So gate didn't even get there. Right. I'm not saying anything because I'm just studying. I'm just creating some higher time frame levels now, just based on gate. This gate token launch price is very important because we've, on the yearly time frame, we've closed above it, and that's a key level. And actually, if you look at these candles, this even though this was a fake dump, the candles are telling me that this is a bullish reversal on the higher time frame. This current candle's got quite good volume. It closed above the gate token launch price. I think I don't want this level to be lost. That's my first thoughts. This gate token launch price has to be defended. And it's, how much lower is it? It's only 28% lower. It's not much lower, huh? So I think, I don't know why we wouldn't go back down actually and just one more time and just clear the liquidity from these lows. Anyone who sells wants to sell, sells, and then the price kind of makes its way back up, because to form some kind of a little bit more structure at these lows, a little bit more consolidation, give a little bit more accumulation at these lows, and obviously it looks like we're kind of range bound right now between the actual launch price and this gate token launch price, because you can already see that it's formed resistance here, it's formed support here, so this is now a support resistance line, right? And you have something similar with this launch price here. It's come underneath it, it's formed resistance, and it's formed resistance. You've got two kind of tests of resistance. And so on the weekly time frame, we kind of range bound at the moment between these two levels. And I think most people will be trying to accumulate at the lows. That's where I would want to buy. I wouldn't want to just willy-nilly buy in the middle of the range. What I would want to do is I would be looking for these lows here and these lows here, and and then I'd be looking to sell at these highs, and then that's already 100% increase in value. So for most people, that's a good trade. That's a 2x on their investment. That's a 1x on their investment. So as long as we hold these levels, these lower levels, and don't lose them, then this is going to form our foundation, and that could take a long time. We don't know how long that's going to take. And I think the longer it is, the better it is for this token, because we want this data in the past to become irrelevant in the larger picture. People that, unfortunately, despite what you're telling me, people are going to look at this and wonder, and a lot of people aren't going to necessarily do their research or even consider this. But if you suddenly now start seeing a few months at these levels, then you'll be like, okay, this is good. This is like, I can see now that we're accumulating. And I think in the shorter term, I think people buying here and selling here is a really good trade. Most people will be okay with that, because they're 2xing their investment. and you only need to do that like 4 or 5 times to increase your portfolio significantly, you know, if people have that discipline. Now, I think we're not going to go up until we flip this higher price into support. That's the other thing. So for a lot of people will be looking for higher, and it's not much higher either. It's hold on a second. Sorry, it was my brother. Yeah, so let me see where we are. I mean, it's still quite a distance, right? It's 100% on your investment. See, this low is more than, it's like 1.5x. So from here, catching the low here and trading it up to there is a 1.5x. So if you're putting $1,000 here, you're getting $2,500 out, and then you put that $2,500 in, and you want to get 1.5x up there. And I think for a lot of people, that's a nice payday. And I don't expect people to just expect the price to just go up, like, and if it does, a little back test, and you could confirm that as a SR flip, and then you're basically in a new range, basically, and then you're between this level and this next level, and actually you've got an intermediate level here. You see that? So actually, so you've got a few things going on here. Let me do some fibs now. Oh, look, so I think maybe this all-time low that you said is correct, because it lands perfectly into the golden pocket. This kind of just above this launch price where this price stopped. It looks correct. If I go lower, or maybe this one's more correct actually. Maybe this one's more correct. Look how it lines up. That lines up with the value area high of this first range, the golden pocket from that high to this low, and then it lines up where the price comes into there. So even though you said that this is the all-time low, it may be that this low here may be more accurate, but it doesn't really matter, because I don't really want the price to come underneath this gate token launch price now, because it's already been confirmed as support once. I don't expect it to suddenly to lose that idea. And so on the basis of that, let me just, if this is correct, let me do a full fib. See, look, this 50% comes up to here. That looks right. And look, this 382, it bounced, you lost it, but it came back to bounce. So that looks right as well. And even these lower levels, hold on, let's see, 236 kind of active as well. And the 786 kind of active as well here. And even the 886, see that? So actually, in terms of fib, maybe this one is better. If I use this one that you said, it's not as accurate. It's not. It's still there, but it's. I think maybe this one is a little bit more accurate. I don't think it matters, because I don't think now we're expecting to go down that level to that level, and I think part of the reason why is because we have a significant level here. Why would we even care about the all-time low where we haven't lost this this level here? See, I think this level is important, and in the context of the bull market, you don't want to be losing levels. You want to be holding levels. You want to be reclaiming levels and holding levels to go up in that context. So I think it's really important that the bulls hold that level, and I think until if we suddenly lose this level to go back down, even though it may be the buy of the century, like an opportunity of a lifetime on this token, I think this sign of weakness is going to keep people out of the market. Yeah, so you might get the long-term absolutists and maximalists. Okay, B writes, don't forget two things right now. The liquidity is low, testnet comes in spring. Oh, nice. Just putting some news. Yeah, exactly. So on the basis of that news, you don't expect to lose levels because that's bullish news. You're buying the rumor, selling the news, basically. So I think losing these levels in the context of what's coming doesn't make sense. At the very least, you're expecting people to buy the dip, to buy the lows, you know, and you would expect a consolidation up here. I think just most people will, I know you're saying liquidity is low, but it's not that low. I mean, you're talking about a $40 million token. You're talking about 300,000 a day in volume. That's all right. That's enough to hold the price at these levels. And it's not, especially because this is like a layer one, right? So there's a lot of interest in these kind of these kind of hidden gems, these layer ones that kind of haven't run yet and have just been building for the last 2 years, and now they're about to launch their big releases and stuff. So you'd expect this level to be defended, right? And I think I would be concerned if we lost it. I really would. And would I accumulate here? It would be very speculative. It wouldn't be like I'm gonna go all in, yeah, because I believe in this project. It would be like, let me just take a position here, like a small position that I don't care about, and see what happens. I think most people will have that in mind. And then if it goes up, then I've already 2x my position, and I've got a good foundation to build on my position at these levels. Yeah, and you can build your position as the price goes up rather than try to accumulate, unless, and this is what I'm saying, let's say we go down because of low liquidity for whatever reason, and then we start ranging here, then yeah, the longer we range, the more confidence people will have to buy the lows. You know, that's the point. That's the point that I'm making. So I think in the context of the bull run, I want to see this low defended, and then the third time, hopefully we're going to get a higher high, you know, and then that, I think maybe what I would want to see is the liquidity to take in here, go back up, and then as a trader, I'd say, okay, look, that low's defended, then I'll just do a fib, and then I'll be looking to come in at the golden pocket, and then maybe that will be the value area low here on this range, good confluence to go up. And then as a trader, I'd have an invalidation as well. That would be my invalidation, and as a trader, I have a very good risk to reward, because then I'll be targeting these higher levels. I'd be looking to see this formation first before I took a pot at this. Alternatively, as a trader, I'd be looking for a swing failure pattern on one of these lows as well. That would work too. But the thing about swing failures is that if I took a swing failure, I'd be taking most of my profit out quite quickly. So because it could always swing failure and reverse, it could always swing failure and reverse and continue. So whereas with this kind of higher time frame price action like this, it's more of a swing idea where I'm expecting more of a, you know, a higher time frame trade, and I think maybe I would be expecting a sell-off again the second time it hits here, and then the third time maybe it will go through, you know. That's kind of, as a trader, that's kind of what I would be looking for, and then that would be nice because you're kind of looking now at an inverse head and shoulders type pattern. Alternatively, putting that all aside, we are into the golden pocket now. We are into the value area low. This is confluence. This is a good time to buy. This could be a higher low. See? Higher low, higher high. This could be a higher low. The next move could be up to make a higher high. It's also possible. But as a trader, I wouldn't take that risk because I would just wait for strength. I would wait for more strength. I wouldn't just, there's no rally yet. This is accumulation. So I wouldn't wait for, I kind of want to wait for the rally to begin before I jump in rather than try and preempt a rally as a trader. As an investor, yeah, this is a good level to add to your pocket. You know, look, on this, forget about the previous price action, which is all rubbish. On this range from this candle onwards, this is the value area low. This is the golden pocket, 618 to 6x. This is the value area low, it's a golden pocket. We're in the higher range. You could add some to your, a little bit, you can scale in a little bit now, with a view to scaling in more if we take these lows. And then if we go down and take those lows, you could scale in some more and hope that this reverses, you know, and starts to make its way back up. And just keep on doing that. You just kind of buy the lows at each like intermediary level, but you still have to take your profit at these like at these levels. The reverse, like you were to draw that, if it came down to there, then the golden pocket and the value area high would line up. You would have to look at taking profit there because it could just come back down, you know. So you are trading this, either you trade this or you don't trade this, so you just accumulate, but then you are looking, if the price does come back down, you'll have to accumulate at the levels where you expect the price to find support, and if it doesn't, then you're just accumulating at good levels. So you have to, like, there's different ways of approaching this, and I think as a long-term investor you can approach it one way, which is how I like. If you've been involved in this project for 2 years, it's the same with me. I've been involved in my project in TRVL for more than 2 years now. I'm not trading that. I've just been accumulating, and I just, you know, I take a small chunk at the low every single time because of my thesis. My thesis is higher time frame, and if you're viewing this in the same manner, then you would do exactly the same thing. You would just be like, I know this project, I trust this project, I believe in this project. So you're just looking at areas of accumulation. Is it ready to break out? I don't think it is just yet. I don't think it's ready to break out just yet. Let me have a look at these moving averages as well. Not that they really mean anything. Oh yeah, because there isn't a 200. It's the 3-day. Let's have a look at that. We had a golden cross here, see, which is good. We're in the highs, which is good. think if we got an injection of volume here, that would be a good sign. And then obviously then we're looking for a break of this high here with a little back test. That's kind of what you want to see now. And a test, and this test doesn't have to take the low, because when it comes to testing lows, the way it works is, let me get rid of all this stuff now. People are going to set their limit orders. They're going to have like scaling in limit orders, like ladder them in, right? And the price will go down as far as it reaches enough limit orders for there to be an equilibrium between sellers and buyers. And once it reaches that equilibrium, the price will start to reverse, right? This is how it works. Now, depending on how bullish it is, will determine how far the price gets. So if the price comes and it makes a higher low, then you know that there was so many limit orders above this low that the price couldn't even make a lower low. It made a higher low. So that tells you something. High lows tell you something. It tells you that there was enough limit orders above a previous low, because there was so much interest in the token that it prevented the price from making a new low. So that's why higher lows are so bullish, because it just tells you there's a lot of interest in the token. And if there isn't enough, if it takes the low and then comes back above it like a swing failure pattern, that tells you that there's not enough liquidity there's not enough shorts. Like if the price goes down underneath a low, then you'll get people sell. They'll sell the lows because they'll go, well, we've just made the lower low. I don't want to be in this project anymore. They'll sell. And if the price comes right back up, it means that there was enough liquidity underneath the low to absorb the sells for the price to come back up, right? So it means something else. It means the same thing, but it reflects it in a different way. And then if the price goes down and it doesn't swing failure and it comes back up and it forms resistance, it means there's just not enough interest in the lows, and there was too many sells at the lows for the price to come back up. So actually what it then ends up doing is that level forms as resistance for continuation. And you kind of have like three scenarios when it comes to how the price moves at key levels, and it's all to do with supply and demand and liquidity. And in an illiquid market like this, most people are looking at for the price to settle down before they start entering. Although we never got that here. Look at this, bang. And that's why I like to look at candles as well, because you have a really nice reversal pattern in the low here. You have this green doji, then you had a close underneath and a engulfing reversal candle which came back above the low of this doji, this whole thing, and then you had the confirmation with this green candle that came up. This whole thing is a reversal pattern in the lows on the daily time frame, and that pattern led to a nice rally. So obviously this is very illiquid, but that reversal pattern still played out. You might be looking for something similar for confirmation of a reversal rather than just trying to buy the dip. I think a lot of people are looking for the price to settle down, to form like a 3 or 4 day, 5 day reversal kind of structure before they enter. And actually look on the 3-day time frame, it did pretty much said the same thing. You had this reversal, engulfing reversal candle it came back above that wick low. That's a reversal pattern. It had a confirmation, was this green candle, 2 green candles, back test and away. And then if you look at that on the weekly time frame, it's harder to see, but actually it does say the same thing, because you had a weekly close above that previous weekly wick low, and then you had this green candle was it back tested these a few levels. It's a lot easier to see on the daily time frame. So right now, honestly, like, I wouldn't buy this candle, just as, even though it's at a good level, the candle itself for me isn't a buy. It's not a buying candle. There's no buying structure here, and I think I'm looking for the price to tell me that the price has reversed. So on a daily time frame, I'm looking for something similar to what we experienced here. Let me zoom in, see? Some kind of reversal candle which comes back above a previous low on a daily time frame. That's the first thing that I would like to see. And in the scale of things, whether you catch the very low to where you might enter, it's only 13-14%. In the scale of things, it's not the risk versus the reward. For that extra 13%, it's not worth the risk, because that might not have been the low. That red candle that came and closed underneath this green wick could have continued, especially since it was under the gate token launch price. The fact that it reversed was confirmation that there was no more liquidity for going down. It was now the price was reversing. It doesn't really matter about liquidity when you're looking at these higher time frames, because there is enough liquidity on aggregate to form correct candle structure at the higher time frames. Yeah, sure, if you're looking at the 30-minute chart, you can't really see any low. That's a market sell. It doesn't mean anything. Is that a swing failure? Yeah, that's a swing failure. There. That's a swing failure. Could you trade that? Yeah, you could trade that. Where would you target? You'd aim for the high, but the reality is the price could get up to just a slither above before it reverses. It's basically now, because it's a market sell, it's trying to fill some volume gaps that I've created. I would expect the price here to go up to this candle before it reverses again. You know, like, that's kind of just how candles form. Right, that's enough of that. Let me see, based on this low here and this high, I'll quickly come up with some targets for you, and I'll just quickly calculate so I'm doing this on the log chart. I think in a bull market, you have some very easy, where's the all-time high? Actually, not from there. Let's do it from the all-time high. Where is that line? Did I mark it? Thereabouts there. So a one-to-one would be just to get back to the all-time high, wherever we are. That's not much. It's only a 7.6x. In the scale of things, that's not much. Yeah. In comparison to a lot of tokens out there. Just FYI. But like you said, there's a testnet coming. This is kind of, it's going to attract a lot of liquidity maybe in the latter parts of the bull market. I think once you clear all the liquidity that I mentioned in that volume profile that we can't actually see up here, all this volume, once you clear all that liquidity and we make a new all-time high, I think if we can flip this all-time high somehow into support, you'll be in price discovery then, right? And you're only 7x from where we are now, so 7 times 14 million is 280 million. With good marketing and a very bullish narrative, I mean that 280 million could easily go up another 5 or 6x in a bull market, maybe even more. It's very possible. So and that would take us to our higher targets of 1.86. See that? That would take us to 1.86, which is the 1.618 on the extension. I think it's very possible to get there. So from where we are now, you could be looking at a 72x. It is possible. You'd have to first clear these lower levels. You'd have to first clear the all-time high, which is a 7x. You'd have to form support on the all-time high for the next move up, and then you're in price discovery, and then it's going to really be down to the bull market hype, the narrative that's presented to the retail market, because they're the ones that have got realistically, they're the ones who are going to push the prices to the really high numbers. And then obviously it's a chain agnostic token, so combine that with some like higher tier exchange launches above the all-time high. It's the same thing I've been saying about TRVL. If you can get lucky and get like a Binance listing or whatever, OKX or Coinbase, whatever, above the all-time high, then actually you could probably overshoot and you can get to much higher prices just if it's timed right. And I don't think there's a way to time it, but if you're lucky and you get that timing right, then that would be really interesting. You get a really high injection, or you could probably 10x just in any one of those exchange launches. And if it overshoots, then yeah, you could get even higher. But I would be looking at these higher fib times, fib extensions as my key take profit targets. Don't mess about with fib, yeah. Just take profit. And when you're extracting value at higher prices, don't put that money back. Don't put that capital back into the crypto market. Yeah, if anyone is able to extract value at any one of these higher numbers, that money should never come back into crypto until the low of the bear market, because that would be very unwise, because you would then be buying in highs. You shouldn't do that. You should only buy the lows, unless you can short. But I mean, that takes real skill and experience. Even though the all-time high on CoinGecko is up there, this chart is actually forming its own kind of thing, which you could probably just use, and you can almost just ignore the rest and just use this chart, to be honest with you. Because look, there's a GAN fan, and it looks quite nice. See that? To this pivot low. Ignore this one, but look at where this low came to. Even though you can ignore it, it almost came to this lower 1-1. See, for some reason these things have a way of figuring themselves out. That's quite nice. So look at this blue line, this 2-1 came above and kind of held it. And then it came above, hit this 4-1, and now it's above the 4-1, and this could be like a little front one of the 8-1. Maybe that's going to still form resistance if we get back up there in March. I don't know how this is going to play out. Maybe that was still going to form resistance, you know. You were saying the test net is sometime in the spring. That's still a way away, huh? That's the problem. Be nice to catch the low here, huh? On the back test of this 4-1, which is the gate token launch price. There's a little bit of confluence there. Yeah, it's in January, yeah, sometime in January. But that would be, for me, that would be like the best entry. Wait for the prices to come down to there and then trade it all the way back up to this higher GAN line, or just these higher levels, you know. There, come back down. I don't know, who knows. I just want to see this gate token launch price defended again, actually, because now the price is coming into it, and it may not happen, but I just want to see that happen. And the mainnet after, we've got a course of a good few. Trying to read this, and they've got this stupid heart in the way. Oh, there it is. Oh my god, why can't a good few months between, yeah. So I think anyone who wants to accumulate this, just this white line, just keep on buying this white line. Let's get up there. And then if you want to just take profit, you could just take profit at this launch price. And then it doesn't matter if you take if you can get here and you take profit there, and it just goes up, then you can just put that money back in when it comes to back tests. So you don't lose anything by taking profit at a key horizontal level like this. It just means that if it goes down, that value that you've extracted, you can put it right back in to push it back up again, you know. And if you extract that value and the volume keeps on taking the price up, then when it retraces and retests that horizontal level, that value that you've extracted, you can put it right back in. But you can put it back in on a retest, on the back test of an SR flip. So strategically, when you're trading, it's always better to go horizontal to horizontal, level to level, and it's always a good idea to take out value with a view to putting it back in, either on a retrace at a lower level, or if we break that level, a back test of the level that's broken. You don't lose anything if you do that, because all you do is you just end up defending the next level to go up, you know. So it's not a bad strategy for people who are just very kind of, they just want a simple way of entering and exiting the market. Just focus on the horizontal SR flips and just be very patient with the way the price moves in between, because it's very sporadic and erratic, and it's very hard, especially in low liquidity environments. I think once the price does get above this all-time high, probably I would imagine that this is the level that we want to beat. Probably. I would probably just ignore the CoinGecko and just go with Gate. Probably. That's what I'm thinking of right now. And then I would go with these fib extensions on Gate rather than this all-time high level on CoinGecko. I think I would rather, for my extension, I'd rather go for the slightly lower prices. Yeah. Just because I can see that this GAN seems to be working off that initial pivot in the high. Hold on a second. I'm going to wrap this up very soon. I think they were in a range now. This is your range. This is your lower range. And then you have a higher range here. Probably here. And you just buy the low of the range, sell the high of the range, flip the high of the range into support, and then you're back up in the higher range there. And however we get there. And I think I would trade it like that. And if we get an impulsive move up, then fine, like that would be great. But I think it would be nice if it's possible to get, like, by March or the spring, whenever these mainnet test nets are, it'd be nice to somehow get to these higher levels, because that's where you want. The higher you can get, the better it will be for the token, because ultimately the most impulsive is going to be into price discovery, where there is no volume and the price can just go as far as it wants. And at the moment you're kind of trying to get back up into higher levels. And actually what would be great is if we can clear all of this liquidity at least one time somehow, just clear it, so that all of these people who are trapped exit, and then we can just form a support here to make another attempt. Yeah. And then you can make then another attempt, maybe a high low, and then we can flip that to go up. That would be kind of, it would make sense, because you have trapped traders who are looking to exit. Whether you think they've sold or not, there's going to be people who are looking to just get out, relatively speaking, break even. So as the prices come back up, they will sell into that. So you need volume to clear that liquidity, to go and retest the all-time high, and obviously at the all-time high, not only are you going to get people, trap traders exiting, you're also going to get traders who are long from these lows, who are going to be taking key profits. So that's usually why all-time high is a good place to take profit. And this yearly level, you can't ignore it, because that is an untapped liquidity level on the yearly time frame, which I calculated from just looking at the candles. Just these two, just where these candles square off, this green and red. That's a yearly level. That's a liquidity level. I think it's good though, and in the context of the crypto market, Bitcoin, and also what they're building, the Quant platform. This looks good, huh? Look, Quant platform signs a 15 million venture capitalist deal. That's bullish, huh? What is that? That's quite bullish. think that's quite bullish. Look at these. Of course you want Saudis or Qataris or whoever they are to invest in your product. Sheikh Mansour bin Khalaf. This is the Qatari ruling family, yeah. Of course, if they're involved, then this is bullish. Look at them. Look at that guy's face. He's smiling. Of course you want these guys to invest. At layer 1 plus. This is bullish. Now we want them to invest some more. Pick up some when it hits my key level. I'll set an alert. It tells you how to pronounce it. Quan. And what is that? QANX. Quan and QANX. It's so technical though that it's way beyond me. It's good that all the team have got LinkedIn as well. This is good. You want to see who the people are that are developing this stuff. Wow, they had 2.8 million funding in 21 and the 15 million VC deal in 2023. This is amazing. 15 million is a lot, huh? 15 million is a big amount of money for a startup. I think a few more partnerships also wouldn't go amiss, you know. Building that ecosystem. Getting this 24 roadmap up is important too. I think a lot of people will be interested to see that. I haven't looked at the white paper. It's probably going to be long. I would be obsolete. Okay, so getting the new white paper up is going to be really critical. One pager. Is that outdated as well? Game-changing layer 1, yeah. Code in any language, resistant quantum attacks. I mean, this may be bigger because I think quantum computing is on the horizon. So if they've developed a technology which allows some kind of resistant, which resists these types of attack. I have no idea. It's way above my head, but it sounds like it could be good. Co-founder and CTO. So it's good that the co-founder is also CTO. So this is the smart guy behind it, Joanne Polasak. I can't pronounce these. The use cases. I probably wrap it up there. I'll create a little video and just put it up on the YouTube and stuff, and who else, you know. I think it's a good project, huh? I'm interested. If anyone's using TradingView, what you should do is I'll show you. You've got your level here, this level that I've marked. Actually, I want to front run it a little bit. I want to see this. This is my first key level. This one. I want this level to be taken in the first instance. And I'll now have a look at the price and see how it behaves. So I wouldn't never just take an entry. I would wait to see if there's what kind of reaction I'm getting. Just add an alert. SFP long trade potential swing. and create an alert and just forget about it. That's how I do it. So I've got this interested low level. That's where I want to first look at the price now. I won't even look at this chart now until I hit my level, probably. And then the other thing I would probably do is I'd set a level on an alert on this higher line, and then I'll do the opposite. I'll do SOS, which means sign of strength, long trade potential on back test acceptance. Do something like that. So now I have two alerts, one above, one below, and I won't even look at this chart now until I get those alerts. And then I'm not worried, because either if the price goes up, I'll get an alert. If the price goes down, I'll get an alert. And if it's in the middle, I'm not interested. Yeah, because I'm looking for lower prices or for higher prices right now. I'm not looking to accumulate in the middle. If it goes up and if I get it higher, I'm not worried, because at least I'm buying into strength. And if it goes lower, then I'm getting better prices. But then I'm looking for reversals. That's how I would play that. Alright, mate. I hope that helped. I'm going to have to go away from keyboard for about 15 minutes. I'm not going to close the stream. I'm going to come back and do TRVL. I'm going to talk a little bit about TRVL actually. So what I'm going to do is I'm going to put back in 15 minutes. And then rather than restart the stream, because I do want to talk about this as well. Right. All right, that was quicker than I expected, which is good. All right, I can delete that now. TRVL. Yeah, so basically on yesterday I got a couple of comments on my YouTube, and I just wanted to address them. I mean, I responded on the comments, but you know, I think it deserves an answer. Why not? And I think when it comes to perspectives, everything's quite subjective, and you know, there's no right answer. We all have our opinions. I'm not trying to say my opinion is right. I'm just trying to say that my opinion is my opinion. I'm giving a reason for my opinion, and people can give their own reasons for their own opinions, and you know, then the jury is out and people can decide for themselves what they think, or and that's basically how I approach everything, really. And let me just come to the comments though. Hold on, let me find them. Where are those comments? Let me just, how do I see them? Let me have a look. It's not as easy as you think. Finding comments. Oh my god, where are they? Maybe it was on that video. Let me have a look on this. Be easier. How do I see comments? Sorry about this, I have no idea. Is it in the studio? Comments, there you go. Right. I haven't responded. I have responded. Not that one. Not that one. Not that one. Where is it? Filter. Have the comments gone? Health review? No. Where did they go? Oh, here it is. All right. Perfect. So he writes, this guy DR2522, if you analyze this candles at low volume, lower time frame and say something delusional, then good luck. And if you dare next time in video, check the order books. Right. I did respond, but I'm going to check the order books as well. Why not? And then what else is there? Is there anything else that's interesting? No. So when it comes to low liquidity tokens, yeah, the question is this: can you evaluate based on candles? Yeah. That's the question. Like, can you do the candles reflect what's happening because it's a low liquidity environment? And he doesn't seem to think so. But I'm not really like evaluating, like I'm not trading this token, so therefore it doesn't really matter on the lower time frames. Wherever you, let's just say for the sake of example, the daily time frame is a lower time frame. I'm not trading this based on daily time frame candles, right? But if you go to the higher time frame candles, like the weekly candles or the monthly candles, then you can't say that volume is insignificant, because it isn't insignificant. Yeah. On the volume here is 36 million. That's last month. The previous month it's for 34 million. The previous month it's 39 million. Yeah, these aren't insignificant levels of volume. At these levels, if I was to say this green candle with a wick above it, that's a 36 million volume candle. At these levels, 36 million tokens times 0.0, let's say 3, that's $1 million worth of volume. That's not insignificant for this kind of token. That's about a 10% of the market cap of the value of this token. Yeah, if Bitcoin has a trillion market cap, or let's just say it has 800 billion right now, it's 800 billion, and 10% of that, well, what is that 10% of 800 billion? Well, that's 80 billion in a month. That's not insignificant volume. Like 10% of the market cap is not insignificant volume. And on these monthly candles, we've been having only on this exchange MEX, we have 39 million, 34 million, 36 million volume at these lows. That's high volume. That's not insignificant volume. Yeah. So the previous month was a little bit lower, 25 million, and then 19 million. So these two candles are relatively low, but they're down candles. So you want candles that go down to be low. And we've had a little bit of a defense of the lows at these low prices. So in total, we've had over 100 million, and that's just on MEX. And if you want to compare that, if you want to look at the other exchanges, yeah, and see what it is on those, well, look, this is Gate. Last month was 37 million. The previous month was 34 million. The previous month was 43 million. The previous month was 38. This isn't low volume, yeah. So you can't tell me that these candles aren't true, because this isn't low volume. These candles are reflecting significant volume, 10% volume. This exchange is 10%. MEX was 10%. These candles are saying the same thing. They are actually, it's the same kind of print. Look, if I was to take these two exchanges and put them side by side, so you can see MEX and Gate. This is Gate, this is MEX. Let me join them. They are joined, perfect. And why is that jumping? Never mind. Oh, I have to pull that down, that's fine. So look, MEX 36, Gate 37. Same candles. Let's look at the closes. Let's actually look at these candles. Let me put this on auto. Put that on auto as well. Make life a lot easier. That's better. Yep. Look, the candles look the same. Last month, it closed higher than the previous candle open. They both did the same thing. They both had expanding wicks. This one didn't take the liquidity from this. This one didn't take the liquidity from this candle. So this one took the liquidity from this red candle. This one didn't. Okay, so there's a little bit of divergence in the extent of how the price moved up, but in all essence, they're saying the same thing. They're basically printing the same thing, the same exact data. In the current month, the month that we are now, right, MEX has obviously been bought higher than Gate. So that's market buys. And the volume on MEX, but the volume on Gate are pretty much the same. We're roughly in the same position. Yeah, roughly in the same position. It's pretty much the same. Then if I was to go from Gate and move that to KuCoin and move this one, compare it from MEX to KuCoin. Last month from KuCoin, we had 52 million volumes, same candle, it's exactly the same. The previous month it was less, it was 23 million. The previous month was 20. So we've had, last month we had an increase in volume on KuCoin, yeah? But it's still a significant amount. That's more than 10% of volume. So in these three exchanges last month, we had 30% of the market cap in volume. And you add Binance, not Binance, you add Bybit to the mix and see what Bybit is saying. Look at the volume in Bybit. Like, that's a significant increase in volume in Bybit, and it's only 12 million. So in the scale of things, it's insignificant, but it's very significant in the scale of Bybit, and that's important too. So the interest isn't just from one or two exchanges. There seems to be increasing interest in all of the exchanges. And when you look at the candles, look, this Bybit candle and this MEX candle, this green candle, is the same. It took the liquidity above this red candle, but it didn't manage to take the liquidity above this green candle. And it's the same on MEX. So that guy who is saying that this is a low liquidity environment and these candles are meaningless, is talking nonsense. Literally talking nonsense. If it's a low liquidity environment, all you have to do is expand your time horizon to get more volume data within the candle itself, and that's why you go to monthly. That's why you go to 3 monthly. Let's go to the 3 monthly. Yeah, let's change this to let's change this back to gate. Let's look at the 3 monthly candles. Let's look at the volume over the last 3 months. So on MEX we had 110 million. On gate we had 116 million. That's a third of the coins, the tokens. There's only 290 something, 92 million coins in circulation. I know for a fact that most of them are probably not in circulation because they're in the treasury or in the foundation, development fund, or whatever it's called. And I said before, my tokens aren't in circulation. There's a lot of tokens that aren't in circulation because people are accumulating. And the fact that we've had so much volume in the last 3 months, on each exchange we've had a third of the token supply being traded. And if you were to take that, if you were to look at all of the exchanges and calculate, let me do that for you. So 110 million plus 116 million plus, and I'm not even going to go to PancakeSwap or Uniswap. I'm just going to look at the exchanges. And on KuCoin it's 101 million. And on Bybit it's of all of them it's the least, it's 17. So that's 344 million tokens have been traded in the last 3 months, not including January. So we're going back October, November and December. Yeah, 344 million in total on 4 exchanges. I'm not even looking at PancakeSwap or the KuCoin, the BTC charts or the ETH charts. I'm just looking at the USDT on those 4 exchanges, 340 million. So if you look at CoinGecko, yeah, and you have a look at TRVL, market cap for 9.2 million and number of circulating supply 290. So more tokens, 344 millions were traded. More tokens were exchanged hands in the last 3 months than the total number of tokens in circulation. I don't care if this is a low liquidity environment. These candles are true. These candles are correct. Yeah, when I'm analyzing these candles on a higher time frame, they are 100% reflective of the volume and the price and what they're telling me, and that's how I'm analyzing this. So I don't care if you think this is a low liquidity environment. Well, don't look at the candles on the daily chart if you don't want to. I'm not really paying attention to the candles on the daily chart, because most of what I'm doing when I'm analyzing this is I'm looking at formations of candles, and I'm looking at the ranges of candles. I'm not looking at individual candles. Yeah, I'm just looking at the formation and the ranges, and what I'm seeing, this is KuCoin, what I'm seeing is an accumulation range. I've said that we're accumulating. Yeah, we're in this range and we haven't left this range. We entered the range on the 2nd of December, and now today we're on the 6th of January. That's 5 weeks in this range, right? And the fact of the matter is that we're slightly higher than a previous range. We were in that range from the 13th of July 23 until we left that range on the 2nd of September. So if you look at this, if you compare this range here to the range that we're in now, yeah, you will notice that the price on average is slightly higher. It's a little bit more bullish now in comparison. You see, the point of control, the volume was relatively speaking was low, and as soon as we came into this range, you see how the point of control is above the value area high of that previous range. The point of the value area high of the previous range, is this upper blue line, is roughly speaking slightly above the value area of low of this current range, and we are at the moment on our current range. The price is above the point of control, which is the highest volume node in terms of price of our current range, right? I don't care about liquidity. I'm not care about the low liquidity. Yeah, sure, this candle going up, market buy, someone wanted X amount of tokens and they wanted it immediately in one go. They didn't want to wait. They weren't looking to accumulate. Because why? Because their time horizon, whoever did that, their time horizon was years. In a yearly, if your time horizon is years, you don't care about 5, 10, 15%. Some people don't care about that. They just want to accumulate tokens, like market buy. You know, sometimes when I buy, I market buy too. I'm not too worried about 5%, 1%, 2% here or there. And some people are like that. It doesn't mean anything. You can't go, oh, low liquidity environment, let's just throw all the charts out of the book. The charts are irrelevant. The charts are meaningless. That's whoever's saying that is parroting something that they've heard from someone else. Yeah. The reason that people say that is because they don't understand candles. That's why they say that. They don't understand it. But rather than admit their own weaknesses, I don't understand it. That would be admitting your own weakness. They say it's all rubbish. They say it's irrelevant. They say it doesn't matter. They say it's insignificant, and you're just parroting what I've heard other people say. In low liquidity environments, candles, levels, patterns are irrelevant. I've heard that parroted time and time again. But if you increase the time frame, go to a higher time frame, you have the volume which gives you the data. Okay, now this swing failure, was that correct? I don't know. I don't even think it matters. We know that there's a level there. We know that there's a level there. If you extend line going all the way back, you can clearly see the candles, the way the candles behaved around this level. You see, we know there's a level there. Yeah, doesn't matter if the candle pokes through or not. There's a level. It's obvious that there's a level. You can't see that, then you don't want to look. or you're literally blind. Yeah, but there's a level there. Okay, it's for the price to get through a certain level, you would expect the price to test it on a few occasions. Yeah, there's no reason to think that the price is going to get through in one test or two tests. It might take 3, might take 4, might take 5. The more you test the level, eventually you're going to get through, and then the onus is then to hold and flip that level into support, right? It's just the way it works. Now, I didn't make that up, and you're saying to me, people are saying to me, low liquidity, you can't look at candles, ignore candles. Well, as I said to you before, I'm not looking at the lower time frames when I'm evaluating candles. If you've been looking at any of my videos, I've been looking at the highest. I start with the highest time frame. I start with the 12-month time frame. I'm looking at this 12-month candle. I'm looking at the volume on this 12-month candle. The volume traded in the last year was 449 million tokens. That's 1.5 times, 150% more than the tokens in circulation currently, and that's only on this one exchange. That's enough. That's a lot of volume for that one candle. Yeah, there's a lot of volume has gone to create this candle, and it's an inverse hammer at the lows. Yeah, this candle is correct. It's true. These candles on these higher time frame candles are correct, right? To create this inverse hammer, that's 255 million tokens went to create that candle. To create this red candle, it's 154 million tokens went to create this candle, where it clearly reacted off these lows, and it closed 50% above the body of this green candle. For me, that's a bullish reaction, right? That's a bullish. Basically, that's telling me that the bears have failed. They've failed to take the price lower. Yeah. If the bears were in control, this is the red candle says to me that the bears are in control, and the bears have failed to take it underneath 50% of the body of this green candle. So they're weak. The bears are weak. That's what it's saying to me. The 3-month candles are also pretty accurate. You know, there's enough volume. Look, 3 months ago until the end of December, 101 million in volume. When I tell you that this candle closing above this wick is important, and you're saying to me in a low liquidity environment these candles are irrelevant, well, this candle that created this red candle, it required 98 million tokens to create that candle. I argue that these levels are not insignificant, they are important. Yeah, I think they are important, and I wouldn't be surprised if we are making the low of this next 3-month candle now. I wouldn't be surprised. At the moment, for me, it looks nice. It looks like kind of what I expect for a push up, but I mean, let's see what happens. We've already had nearly 6 million, 5.79 million in volume come into this candle already. Yeah, in the scale of 3 months, we're already 5% into this candle in terms of volume compared to the last. We have, how many more weeks do we have to complete this month now? We're only in week 1. We have another 11 weeks. We're well ahead of schedule in terms of volume for this candle. This previous candle was 101 million in volume. That was a 12-week candle, right? So if you break it down on a weekly basis, then that is 101 million divided by 12. That means that's 8.4 million per week, right? So right now we're up nearly 6. We're almost at the first week. Okay, so maybe we're slightly behind schedule, but we're almost on par. Like, we're not, it's not behaving badly, you know. It's not low. it's almost on par. And remember, this is only one of 4 of the exchanges, the centralized exchanges. And on aggregate, I mean, let's look at the aggregate. This is KuCoin. Let's see our current month on MEX is 5.2. That's compared. So we are slightly below what you would necessarily want, but you know, we're only just beginning, and we have to see how that pans out. Okay, that's fair. That's a fair statement. We are slightly low on volume, but look, I don't expect there to be significant volume right now because we're still in accumulation. I want volume when we start moving out of accumulation. Yeah, I don't care that the volume now is relatively speaking low, because actually I don't want the prices to go up. I would rather for people to accumulate in small amounts over a longer period of time so that people can get the better prices. I want people to get better prices, and the way to do that is to buy small amounts over a long period of time. Then you can get a better price on average, on aggregate. I don't want people to buy all of their tokens and for the price to slip up to like 5 cents when all they had to do was just scale in at these lower prices and accumulate more tokens. That's what I want. I want the prices at these levels to be gobbled up so that there are no more tokens at these prices. And then when you gobble up all of the liquidity at the lower prices, what happens is the price starts to move up. Eventually the demand will outstrip the supply. That's just how it works. And the other thing is that if you were to look at every single token, there was a low liquidity environment. Okay, if you go and have a look at Bitcoin, right, and go all the way back, and look at this. Where's the liquidity in Bitcoin? Going all the way back. Oh, actually there's no data there. Look, this is where the data begins, July the 10th. 15,000 Bitcoin, 19,000 Bitcoin. Come on. Every token has low liquidity periods, yeah? It's no big deal. Doesn't mean anything, yeah? But you telling me, even in this low liquidity period, that these candles were insignificant. Well, you had an increase in volume when this price dropped. That's true. But ultimately, let me show you what happened. This is a low liquidity environment. This is Bitcoin, right? This red candle is a 27,000 candle, right? This red one here. Regardless of the low liquidity environment, the price had to flip that candle from resistance into support. It makes no difference. It makes no difference about the low liquidity environment. When you're forming candle formations, when you're forming structure, you still have to do exactly the same thing. Yeah, you had increasing volume on all of these candles going up, but fundamentally what needed to happen was the same thing. You needed to flip this level into support, and that's what happened. The price went up and it flipped into support there, and then the price continued going up. Why did the price come back to these levels? Why? Because this candle it means something. It doesn't matter that it's a low liquidity environment. Yeah, this is the 3-day chart. Yeah, look at where the price came. This is going back to 2010. Look at where the price came in an extremely illiquid environment at a time where it was extremely difficult for people to buy and sell Bitcoin. Very difficult. They had like that stupid Mountain Cox exchange, I think, or whatever. I don't know. Just it wasn't easy. I know it wasn't easy. And it's the price still did the same thing, right? You had an increasing volume which took the price above a previous level, and then the price reacted off the level which corresponds exactly to this low liquidity environment candle printed on the 3-day level. Yeah. So when I say that this candle that we have now needs to flip into support at the top of the candle, just like this, I'm looking at Bitcoin. I'm looking at every token. Every token has the exact same path in low liquidity environments. Oh look, surprise, surprise. This one was actually front run, but I'm going to show you the exact same thing. This candle, this red candle here, was a 228,000 volume candle, still low in the context of Bitcoin. And you see the price did attempt to come, and this was front run because of the demand. But look, the price does still try to come back to these candles. Still have to flip. These candles do matter. You can't ignore these candles just because you're saying to me low liquidity, let's ignore candles. That's literally bullshit. Yeah. So when I'm looking at TRVL, right, when I'm telling you that we need to flip, this is the same time frame. Yeah. When I'm telling you that we need to flip, let me get all this, rid of this shit. When we need to flip this candle, this one here, this red one, into support, it doesn't matter about the liquidity, the environment. Yeah, we need to flip that into support. Yeah, and that corresponds with many levels with that which I already drew. And when you look at all the other tokens, they behave exactly the same way. Yeah, so these candles do matter, but I wouldn't they're points of reference. Ultimately, we'll see the formation of candles, and if we can form candles like this, then it will go up. Yeah, because that would be a confirmed SR flip. That's the target for the bulls. Yeah. And I've shown you on Bitcoin how that behaves. And then the guy's probably going to respond to me and go, oh, but that's Bitcoin. You know, Bitcoin is special. No, it's all the same shit. You know, it's all the same. It's all the same. Every token, everything, it all behaves the same way when it comes to candles and formations. Yeah. You can take fractals and you can apply them all the way across the whole market, because basically the formation of candles is reflective of the market and the psychology of the market and the supply and demand of the market. And then obviously in certain circumstances, it's the liquidity or the lack of liquidity of the market. All of these factors come to form candles, because it gives you all of that information just in the way they form. Now, I may not have confirmation on one single candle in itself, but then the formations, the patterns, all of those things matter. And then obviously you can add your other tools such as volume levels, and then other tools such as the Fibonacci tool, and you can get more in-depth analysis, which people back then didn't even have. The fact that in Bitcoin they didn't have those tools, and the fact that Bitcoin was able to do what I just showed you in terms of this first candle, how it flipped into, no one had tools back then, really. No one really was trading the way we are all trading now, technically trading. But if I was to I don't know, if I was to just let me just do a fib now, just for fun. What do I want to do? Just for fun, let me just do something random. Let's pivot to the high. Start a fib. Probably an extension, huh? Oh, surprise, surprise, look. It comes into my fib extension my TR pocket here. Oh look, surprise, surprise, look how far it extends to the 1.168, you know, and then it comes back to back test this 1.414. I mean, look, I just did a fib extension on an extremely illiquid environment on Bitcoin from this pivot high to this low, and the fibs all match, the extensions all match. Yeah, I didn't make that up, it's just happened. I just did that now. And look, even on the highest time frame, look at the 2.1618. Look how it kind of, obviously it overshot, but ultimately, you know, the behavior, even in illiquid environments, still conforms to certain principles, and you just can't ignore it. All right, so that's TRVL. If anyone has any questions, or if anyone wants me to stream anything, then I'm happy to do that. And then keep on accumulating. I'll see you tomorrow. I'll just check my chats to see if there's any questions, because I haven't looked. Oh, hold on, here's some comments. Let me just go through these things. It's technical, external. Sorry, I haven't really been paying attention to the comments. Crisscross, yes mate, welcome, thank you. Crypto Sev, thank you. I love this guy. I love his accent as well. He's like late night zombie trading Solana, making shitloads of money. I'd be laughing. ETH is not able to do that. It's technical capable to call external. Oh, you're talking about Quan. Yeah. So basically he's saying that Quan is capable to call external websites, APIs, or apps when executing triggered by a transaction. It's very technical. I'm not really that technical, but I guess that's important. ETH is not able to do that. Do you remember the Web 1? There was no navigation, there was no Google when it came to Web 2, where interaction with the websites were possible. Okay. Well, what I can do is I can take a transcript of this chat and I could just drop it under the video, or when I cut it and I publish it, and then people can just read that anyway. I can totally do that. Let me see if I can do that now. I'll do it later. That's fine. And token burning, yeah. So there's a lot of Quan enthusiasts who just joined. Thank you for joining. I appreciate that. Let me go back to Quan quickly. Have a look. Oh, this is nice. I like this. Is that Quan? Oh no. I was going to say I like this candle, but then it dropped. Let me get rid of this stuff. I mean, we're at this. Yeah, we're at the 618 now. Huh? But there's no. You see, there's no reaction. I'm not getting the kind of reaction that I would want to get for the way I do it is I've got a level in mind. So let's say this 618, this golden pocket is my level, and then what I would do is I would zoom in on the lower time frames, zoom in, and I'll be looking for a reversal pattern of sorts, some kind of confirmation to enter, and I keep on zooming in on the time frame, and I can't see it. And the reason why you can't see it at the moment is because we're clearly making lower highs. Yeah. So the market structure hasn't changed. We're making lower highs and we're making lower lows. See that? So you need, like, I need the market structure to change on the lower time frame first. There's no rush. That's what I'm saying. And any trades at these levels is at the moment it's a scalp. It's nothing more than that. Yeah, because we haven't changed market structure. People are still selling, and it's what I said. It's about liquidity. So people will put limit orders, and the price could come back up. And the reason why it makes a lower high is because of the balance or in the market. Eventually, supply will outstrip demand, and the limit orders will fill to a point where it doesn't allow the price to make another higher high. And that's why you get lower highs. And then there's not enough limit orders at the lows, so the price just slips through them and then makes a lower low. So this is just the price following the liquidity. Actually, that's all that we're seeing right now. And what you want, or what I want, is for the price to tell me that it's finally reached the point where there's more buyers than sellers. And the first indication of that is going to be some sort of market structure change on the lower time frame. So I want a higher high, and then I want a higher low, and then I want a higher high. I want the structure to change. I need this lower high to become a higher high. I need this lower low to become a higher low, and then I need that higher high to be taken out, so I have a higher high. So I need a structural change. Yeah. And then once I get that, I can look for an entry, and the natural entry will be some sort of retracement into a golden pocket area, or an SR flip, or something else. And then the other thing that I would use to trade is I like to look at candle reversal formations, and so obviously the higher the time frame the better, but you know, when you're trying to get a snipe an entry, first I want the market structure to change, because this is clearly bearish market structure at the moment, right? It doesn't mean it's bearish, it just means that people are selling off. That's all that it means. It doesn't mean it's bearish, it just means that I want the price to stop being sold off, right? Once I get the local market structure change, and you can zoom in all the way that you want, but you want that to reflect upwards. You don't want it to just be a 1 minute market structure change. You want that to reflect higher. And so let's say you go for something a little bit more medium term. I mean, it would be very nice if we could kind of get back above there. Take out that high. Come and form support there. If you wanted a reversal, you're looking for a reversal, and then maybe even higher, I don't know. I would like to line up with something, maybe even higher. Just like something to just tell me, okay, the price is no longer going down, you know. So then you have then all of this is take profit. Let the people that have longed take profit, and then once they're exhausted, I can back test this level into the golden pocket. This is my invalidation, and then I'm looking to make a higher high. So this would be I'll be trading the higher low, we've made a higher high, I'm looking for a higher low. It could still go down, which is why you have an invalidation. So if it does go down, this becomes your lower high, and then you're making lower lows still. So it just means all of this is negated. That becomes your lower high. But that's not the thesis. The thesis is that we've made a higher high now. We're looking to change market structure. I'm trading the higher low into some kind of golden pocket, which corresponds with some kind of SR flip, previous level, maybe also a volume level. Like if you need 3 levels of confluence to have a higher probability trade, and then take out that high, you've made your higher high, and now you're in a change of market structure. And it doesn't necessarily have to continue. It could, then you could also have another entry here, and that would be your higher high, and then you'll have more volume come in here because now people have seen the change of market structure. They'll be really looking to aggressively buy the back test of like a golden pocket, and that's when you're going to get some kind of inverse head and shoulders breakouts type pattern. That's how it forms. And what I'm showing you now will reflect on candle patterns, in candle structure. Like they all correspond with each other, and this is just a formation of lower time frame candles. And then when you go to the higher time frame, you'll see the same thing. You'll see something similar. On the higher time frame, you'll see, you'll get like a bullish green candle, and then you'll see something similar. And then I think it's also good to go back to see, like, look, this was the reversal that I initially talked about. You'll see something like this, like on the daily chart. You'll get a reversal candle with a back test, a closed higher than that wick, and the price bought up, and then people look to enter the back test, and then you always get chances. Like look at this move up. People are like, oh my god, the price is going up, I need to buy. They FOMO in, but you're always gonna, once you change market structure, you're always gonna get a chance to come in on the retrace. See, comes in golden pocket. It lines up with like previous levels. Probably did volume. I'm not doing crazy analysis on this at the moment, but it's, and look, you also had a reversal pattern here. You see that these 2 red candles were reversed of that green candle. The price came back into these wicks, it held, and the price went up. So there's plenty of opportunity to get in, and it's better to just be patient and wait. Right. What I'll do is I'll join this to the other one, and I'll do the comments and stuff. I hope that was fun, and yeah, until tomorrow. Now I gotta turn this thing off.